Okay. All right. Good evening, good morning, good afternoon, wherever you find yourself in the world. Welcome to our webinar once again. Tonight, we are talking about the basis of Forex. All right. And this session is going to be in 4 sessions. So I'll be doing it in series, right? So I would like you to take advantage of our ongoing program, right? God willing, we are starting a very powerful program, and also on the 4th of September, this program you see, a flyer you see on the screen is coming live, all right? Once again, if you are new to this channel, this is Blue FX Academy, where we dive deeper into the market. And this is what we do, where learning and trading the Forex market is made easy for all. And this is a greater advantage for you all online, wherever you find yourself, that by podcast or audio, whatever. Please make a good use of this promo in August, all right? So that you can get up to 60% off all our courses, all right? The beginners, as you can see, was 2499, and it's now 149.99. Mastery 149.99 is now $99.99, right? And the advance, which was 134.99, is now $270. So there has been a greater advantage for you all. Also, the mentorship class, the mentoring session you go for $700 and it's now $499.99. And right after August, what is going to happen? We are going to shift everything to its original prices, right? All right. So in this webinar, we are going to talk about something very simple, of which we all know, right? Just as I said, this is going to be a part 4 series, the ultimate guide to Forex trading, right? Part 1. And I am engineer Lewis Manuel Finn Entry. All right. So in today's webinar, we will be discovering how to trade the Forex market, even as a complete beginner. All right. I'm your humble instructor, Engineer Davis Manuel, Ultimate Guide to Forex Trading 1. Okay, so this is what we'll be covering in this session. Introduction to Forex trading. What is Forex? Why trading Forex? Lesson 2, benefits of trading Forex. What are the Forex markets are? Lesson 3, basics of Forex. Terminologies in Forex. Stop loss, take profits, entry levels. And session 4, we'll start with currency pairs. Going long, going short, types of traders, secret to consistent profits. Positive expectancy in trading, implementing a trading plan, principles of consistent trading, profit in trading, and how to be a successful trader. So this is going to be in 4 sessions, and we are going to cover from 1 to lesson 3, and a little bit about lesson 4, currency pairs. All right. So let's dive in. So who is this webinar for? In this day, who is this webinar for? This webinar is for you. If you are a beginner trader with little to no trading experience, all right? If you are a trader who has not yet achieved a consistent profitability, and also if you want to learn how to profit from the market without being glued to the screen, all day just looking for opportunity. So at the end of it all, at the end of all these 4 sessions, or this the webinar will be part 1 to 4. At the end of it all, you should be able to do all this. So this quick one, this webinar is not for you if you are not open to new ideas, if you're not willing to receive new ideas, if you're not willing to observe things, all right, this webinar is not for you. So you can easily exit the webinar. If you do not want to follow rules of simple system, right? Because all the system we use in Blue Whales FX Academy, we use simple system with simple rules, right? So if you are not willing to follow those rules, please exit, right? So the next one is if you are not listening to rumors, right? If you listen to rumors, please, this webinar is not for you, all right? And if you want to get rich quick in Forex market, please, this is not going to help you. So once again, we remind you to take advantage of the few days left to get into our program. All right, hurry up to book your slots. Teaching begins in September 2023. All right, let's get started. Yeah, this is where we are going to talk about Forex, ultimate guide to Forex trading, and how you are going to be a profitable trader, how you are going to opt opportunities in the market, okay? How you are going to create your own system that will work for you 247. So in chapter 1, we're talking about introduction to Forex trading. This lesson will be talking about what is Forex trading and why trading. As you all know, Forex trading, the word Forex simply means that foreign exchange, also known as the FX or FX market, is the world's most largest traded market with turnover of about 3.0 to 7.5 trillion per day, right? To put this into perspective, the US market trade around 530, right? That's 553 billion a day. Quite a large sum, but only a fraction of Forex markets, right? So Forex is traded 24 hours, 5 days a week across the globe by banks, institutions, and individual traders worldwide. Unlike other financial markets, there is no centralized market for Forex. Currencies trade over the current counter, right? Currencies trade over the counters in whatever market is open at the time. You remember that? So, yeah. So why trading Forex? You know, Forex is most traded in the world, and when you understand the benefit of markets, it's easy to understand why. Please be aware that trading Forex carries a significant of what? Losses. And it's not suitable for all investors. So please know yourself and see how best you can cope with the Forex market. All right. So that's just a quick about the Forex basis. All right. So this time we are going to talk about benefits of trading Forex. Why do we even consider trading Forex at the first place? Why do we consider? Once again, if you are new to our channel, please don't forget to hit the subscription button. Okay. Also hit the notification, like and share to others. They might also be in need of this wonderful video. Yes, I think it's a webinar though, but I know it's live on Facebook, YouTube as well. That's why I'm making mention of subscription and liking as well as share. All right, let's continue. Forex trading is one of the most popular and accessible form of trading. Here is some of the reasons why you might want to consider trading Forex. Market liquidity and accessibility. So there's a large number of what liquidity and accessibility in the market, of turnover of about 7.5 trillion a day. On average, this is 10 each and every day. So when you understand the system, you can actually do well in the Forex market. There's volatility and profit potential. The Forex market is very volatile, meaning price can change rapidly and unpredictably. All right. So this feature can create many profit opportunities for traders skilled in anticipating and reacting to market movement, allowing them to gain from rising and falling markets. Volatility means you can earn high returns on your trade, especially if you use the right word leverage. All right. So this is just about theory. But then, once we get to the part, we have to dive in more. I'll guide you. Don't worry. Yes, we dive in. That's our name. We dive deeper in them every day. So there's low barrier of entry, unlike stock, unlike future, forex trading and option auto forex trading. You can even use as low as $100, $100 to what enter. And there you go. You can make something out of it. So there's low barrier, and regardless of where you are, you can enter. You can trade the forex worth trade or the forex market. Leverage and margin trading. Leverage allow you to, you see, in forex, the only thing that helps you to trade and get more is the leverage, right? So when you know how to use the right leverage, you are always on the move, right? So in this note, I will say if somebody have some question, we will quickly dive in and then we continue, right? So you can put all the questions in the chat box and I'll read them and I will answer you. Okay? All right. So diversity and hedging. Forex trading can help you diversify your portfolio and hedge against other investments. All right. So understanding this, diversity means that you can trade currency pairs that are not correlated, reducing your overall risk exposure. So let's continue. So we continue the benefit that's low transaction costs, unlike stocks and other stuff. You have to have a huge sum of money before you can even enter. You see, but this having low transaction costs. And also when you come to the financial markets, the local and the traditional banks and other stuff, sometimes there's this huge sum of financial cost you have to pay on a certain let's say you buy a treasure bill or whatsoever, when you are transacting, when you are moving a fund from one bank to another, there's this huge sum of how do the cost, the transaction cost is huge. Sometimes more than 10% is out of your capital, and you see. So as for forex trading, it's not like that. There's low cost. You can even trade and get as many profit as you want, but as low as $1 something, $3, you are still better on your move. All right. So flexibility and independence. You have all the comforts to trade from your home, your office, even wherever you find yourself, you can trade the forex market 90 days because the market open for 24/7, 5. All right. So you have many days to trade, many time, regardless of where you are, you can trade on any market. And many lot sizes to choose from. You can choose from the standard, you can choose from the mini, you can choose from the micro, right? So there are many standard lots, there are many lot sizes to choose from in the forex market that will give you it appropriate with returns, right? So let's market manipulation. This is not like people somebody's bank or something, right? So there's no much manipulation in the market. When you were able to understand, you move with the big guys, and then you are creating much money for yourself. No commission except on let's say professional traders, right? But retailers like you and I, right? No commission, right? So we move to lesson number 2B, talking about the forex hours, right? So what are the forex market hours? As discussed, forex is traded 2-4-5 week by the different time zone in the world, right? Unlike other markets, forex trading doesn't have to stop when the sun goes down, right? Since forex is traded all over the world, trading market is open 2-4 a day, 25 days a week, so you can trade when it is convenient for you. Let's now look at the four main markets time zone using the Hong Kong time as our reference to the GMT 0. Okay, so Hong Kong is, we know, is 4 hours ahead. All right, so here in Ghana, for instance, now that it is let me be quick about it, about 1 p.m. 1 a.m. All right, it's 1:50 now. All right, so Hong Kong time plus 5 8 of this. All right, so we have the Sydney, which is 10 hours ahead, Tokyo market, which is 9 hours ahead, London, which is 1 hour ahead, and the New York or the US, which is 4 hours behind. All right, so when you check the time, when you check this and then we are having here the Sydney or the Australian market open right from here, all right, and we'll continue all the way to this end, all right from here to here. So you can see that on 6, these universal forex markets are, so on 22:00 GMT, all right, that's 22:100 GMT. The Sydney market or the Australian market opens, okay, and that will be 6 o'clock. 6 o'clock Hong Kong time, right? 6 o'clock Hong Kong time. This market is open. 6 o'clock a.m. This market is open, and it will run through till 6 a.m. in the morning. That's 0600 GMT. That's 2 o'clock Hong Kong time. You understand? Yes. So this will be running just like that. This 2 p.m. Hong Kong time. Yes. Then the Tokyo market will also open on 12 o'clock, right? 12 o'clock. That's 24:100. This market will open and it will run all the way to the 8 o'clock. That's 0800 GMT. All right. So this is how this market also work. And then we have the London time. The London market also open from 8 o'clock. It overlaps with the closing of the Tokyo market, and then it will run through till 4 o'clock. Okay, that is 16:100 GMT. And then before this market will close at 1600 GMT, 1 o'clock, that's 13:100 GMT, the US or the New York market will also open. So this also overlaps, this area overlaps, okay, and this is where you have the high volatility in the market, high volatility. So wherever there's an overlapping, you think that there's a little or more volatility. Right? So when you check right from here, the Sydney time, the Australian market, and then the Tokyo market will open at 2400, and then it will run through 0600, right? And then this area will be an overlapping, right? So that's it. So we move on to the next session. Then we'll be talking about something special. So there's different times in the world. Okay, we have the daylight saving time, that's the summer, and then the standard time, which is the winter. But let's note something here. There's something significant. There's something significant here. There's something very important here. On the summer, all right, or the saving time, you see the market trade 9 hours, all right, 9 hours. In that time, the days are a little bit longer, right? Yes, but for the standard time or winter time, the market trade for 10 good hours. 10 good hours. Why? In this, we have a very short day, right? A very short day. So the market has to open early and close late. So 10 hour different. So remember that. So you can take a screenshot of this and study it very well. Well, you need not to ask me how it is done. Just we'll go to see what time we are in now, right? Move on. So once again, we are still reminding you of our program. So this program is for each and everyone, right? The mentorship program, you really love it, you really enjoy. So take advantage and you can just DM me or just send me a message, right? On all our social media platform, we will get back to you, right? So on social media, you can get that as well at BWFXA, right? And we will also keep in touch with you, or you can send an email to our official email address, bluewellfxacademy@gmail.com. So lesson 3, talking about the Forex basics. Okay, the Forex basics, actually, we are going to talk about 4 simple things which we have to know before we even begin anything concerning market and the Forex, all right? Before we begin even trying to trade the demo, we need to know these 4 simple things we're about to talk about here. The first one will be the terminologies in Forex. Terminologies. You're hearing pips, you're hearing bull, you're hearing this, you're hearing that. Currency pair, exchange rate here and there, margin, call, leverage. So these are very key things we are going to discuss. All right. So terminology in Forex. These terms are language spoken in the industry, in this industry, right? Yeah, when there's a saying that when you go to Rome, you do what the Romans do. So this means that in every institution, there's a language that we speak. You understand? So in Forex market, we have language. And this language, each and everybody in the whole world speak the same language. Therefore, you also have to understand, right? So below are some but few terminologies in Forex I can share with you. We have the bull or the bullish, which means that this term refers to what the buying market, or going long, right? With the expectation that when I enter a position for a bull market, it means that I'm expecting that the price will go up, all right? And vice versa is the bearish or the bear market, right? Yes, so which means that I'm expecting that the market will come down, therefore I'll go for short or sell. Then we have currency pairs, all right? Currency pairs. Currency pair refers to Forex is traded in currency pairs. One currency is bought while the other is sold. Remember that. It's simple. Once I sell one, I'm buying one. It's simple. Together they make what an exchange rate. So we can also define exchange rates as the rate at which one country's currency can be exchanged for another currency. You understand? So for instance, if I want to go for a vacation, why do I need an exchange rate? Why do I when you want to go for a vacation, let's say you want to go for a vacation, right? From Ghana to, let's say, any part of the world, say USA, London, Tokyo, wherever, New York, Beijing, I just have to exchange the Ghanaian CD to that currency, right? So I'll go to my local bank or the Forex Bureau, and then I say, I need this amount of dollars, and then they'll give me what I have to give them something, they'll give me that. So they have to quote it for me, right? Quote it for me. Okay, so let's say a CD to dollar is what? Let's say 12 CD, 30 pesos, all right? 12 CD, 30 pesos per dollar. So if I need $1,000, it means I have to use what? 1,230 Ghana cedis, and then they will give me what? Just $100. You understand now? It's simple. It's simple. If you don't understand, just rewind the video. You understand. Another example is that, let's say a big institution or a big company, right, want to buy something. Let's say Coca-Cola want to buy some raw materials, all right? They cannot just, let's say, from Africa or any part of the world, they cannot just say, oh, we need this, so we are giving the dollars. Let's say Ghana, we don't spend, or we don't use what dollar, right? we use CD. So let's say the Coca-Cola company will have to exchange, all right? You have to exchange. So they will go to either the bank and then do a pop transfer or something, and then in exchange with the Ghana CD, and then they will use that one to purchase the raw material. So I think you will now understand the difference. So that's the reason why we have an exchange rate. So we have the base currency, and in Forex, it always quoted in two ways. Right? Forex is not like going to buy a share like Facebook. What's the price of Facebook? What's the price of YouTube? What's the price of Amazon? What's the price of this? What's the price? No, Forex is quoted in currency pairs, right? So let's say USD GHS, right? Or GHS USD, that's Ghana cedi versus the hot US dollar. So they are quoted in pairs. So you see that the base currency is the first currency in the pair, right? In the currency pair. So let's say in this sense, it's Euro USD. So the Euro is the base currency, whereas the US currency, US is the quoted currency. So that brings us to the quoted currency. The second currency quoted in the currency pair is called what? The quote currency. That's in this sense, Euro USD, it is what? USD, which is the quote. Then we have long, that's going. Long means what? Buying, right? Buying refers to the purchase of an asset with the expectation that the markets will appreciate or it's set to rise or go up. Understand? So vice versa is the short of position or sell. This where it's set to sell an asset with an expectation that its market will depreciate or set to fall or come down, right? So appreciation, there is an increase in value of an exchange rate, and depreciation is the vice versa, right? So it's just simple. These are just simple terms you have to know, right? So moving forward, and okay, let's talk about the risk management. This involves the use of strategies in order to help control or reduce financial risk. An example is a stop loss order, take profit order, and so on and so on. Later we'll be talking about it very much more. So in Forex, just as we had it in the benefit of trading Forex, there are many lots sizes to choose from. So in Forex, they are traded in lots, right? A standard lot is equivalent to 100,000 units, right, of the base currency. This is US 100,000 US dollars. So if you are trading in what US dollars, a mini lot size has what 10,000 of the base currency, 10,000 units of the base currency, and the micro lot has what 1,000. That's 1,000 units of the base currency. And there's another one which is a nano lot, which has what just 100 of the base, 100 units of the base currency. So in the chart, you can see that you see that lot size chart in Forex. Lot size, we have the lot. Under the lot, we have standard lots, mini lots, micro, and then nano. Okay, but you see, I have highlighted one. I just highlighted the micro lots, all right? Which means that as a beginner, this is what you'll be playing. Please don't go beyond. Don't come and tell me I blow my account. You have to stick 0.010, right? Some brokers will even eliminate the 0. That's why we don't normally consider the nano, right? We don't consider the nano. Yes, so that's it. And then you can see that we have the units. So the lot, under the lot, we have this, and then under the lot size value, we have 1, 0, 1.0.11, 00, 0.01, and 0.001. Okay, so standard lot will give you a value of 1, right? A lot value of 1. Mini lot will give you 0.100, and the micro lot will give you 0.010, and then nano will give you 0.001. So the units for the standard is 100,000 units of the base currency. The mini lot is 10,000 units of the base currency. The micro will give you 1,000 units of the base currency. And then nano will give you 100 units of the base currency. So when we have a value per pip, this means that anyhow, anyway, either way the pip will move, it's either you either gain or lose something, right? So let's say we buy and then we trade it in the standard lot. We are buying 100,000 units of the base currency, right? And the lot size value is 1. The value per pip is $10. So should the trade go in our favor and we get $10, $10 times 10 value per pip will give us $100, right? So in that same manner, if should the trade go against our favor, against us, and we lose, let's say 10 pips, or let's say 5 pips, right? 1:2 trade, let's say. So 5 pips, it means that we are losing $50. Right? So that's how it works. So that's why I say don't go far as a beginner. Just stay with the micro lots and you will smile. All right. So we have leverage. Talk about leverage. And the leverage is a feature that enables you to your trading strategy by using money that you loan. Right? If somebody loan you money and you are using it to trade, right? And you have your small money deposit, and then they'll give you their large money to trade so that you can trade this large amount of units. You understand? Other than that, your $100 as a beginner or your $1,000 as a beginner cannot trade the units they are talking about here. You understand? So that's why the leverage comes into play, a major role. It's also a way for an investor to increase their trading power and manage a greater position on the market with a nominal investment amount or capital. So you understand? So if I have 10,000, if I deposit 10,000 as my trading capital and I choose a better leverage, I'm able to manage and also expand my trading power. Understand? All right. So these are some of the leverage that you have. 1:1, which is you are using 100% of your account to trade, right? Or which none of us, I don't recommend. 1:50, 2% of your account, I don't recommend. 1:101%, I would not even recommend that one either. But the best thing I can recommend to you is 1:200 or 1:1,000. 1:1,000. Sorry, the word there is 1,000. It's not 10S00. It's 1,000. 1:1,000. So remember, leverage comes with its own danger too. If you don't know how to utilize it, you can overtrade, increase your changes of margin call, that's total loss, and higher the leverage you take, the higher the risk. Be sure you know your hot risk you are going to be like before going into trade. All right, please. Everything we are teaching is for educational purposes. Do not trade on your own. Get a mentor, and the mentor leads you in a better way. All right, good. So we continue with the terminology. We have here a very nice chart here. We have margin, minimum deposit headed to maintain an open position. With an open position of 150,000, a leverage of 30, the required margin is 45,000, 4,500. That's right. So we have bid price, and the ask price. I know you would have heard of this word, bid price and the ask price. The market price level at which an asset is sold, right? It's indicated by the red line on the chart, and always above the bid price, above the bid price. Above the, it's always above the red line Yes. Okay. So there was a little bit this thing. So we'll talk about that one later. So I will just annotate it for you to know what it really means. So when you're talking about bid price, you're talking about this line. All right. So that's bid price. You have the ask price. So quick one, very quick one. Let me just do this quickly and we continue. Do this quick procrastination, we say. It's a thief of time. So, like, I always want to be very, very good in anything that we do. So that we have the ask price, bid price. Quick one, quick one. All right. Okay, we are back. So we are back. We are back. Sorry, we have to do some changes. So the bid price, we say that the bid price is market price level at which an asset is sold. All right. So this is what it really means. If I want to enter a buy, all right, I want to enter a buy on this chart. Let's say at this level, I've seen a very nice setup. So this setup that I saw, I want to enter a buy. Okay, from here, this line will activate as a buy. The red line will activate as a buy. Okay, so that red line will activate as a buy for me, right? Why? Because of what? Spread, right? So instead of this, the original price, but it will be bought here. Sorry, it will be bought here. Once it's buy here, now this will give me my original profit. All right. So this one has to come above this to give me profit. That's why sometimes when you enter a trade, you can quickly see that there is what the trade is running in negative. Why? Because of this. So once you enter a buy from here, you enter a buy, all right, a buy position from here, you can see that instead of you saw the price here, right? The price is here. So the price registering here, the price rather came to register here, right? And then your trade is still in negative. Why? Because of what we call spread, right? So likewise, if we want to sell, okay, then we see a very nice opportunity here. So we want to sell. This is the original price we want to sell. Once we press on sell, this region will be there for us to see that this is the price, but it will be registered here. All right. This one will be registered as what? Sell. Instead of it should have been what? It should be registered here so that we will continue being profit. We are going down. Rather, it will be registered here. So unless this red line have to come below this one before we can start being what? Profit. So you understand, it's a very bit tricky, but don't worry, you'll get over it soon. Right. So quick one, we can say that spread. The difference between the bid and the ask price is called spread. Right. The selling price and the buying price. That's what you are trying to say. So this is the one price arena, this another. So the difference between this area and this area is what is called spread. Spread. So this is the spread. All right. So let's get that one to clear. Then we have entry points. All right. Entry point simply means that a price level at which a specific order is issued. All right, or it's placed. All right. Then we have stop loss. Don't worry, we'll be talking about more about stop loss and other stuff. So I think we can buy a quick one. A stop loss, you can see that is a risk management tool that allowing a position to be closed. Right. This means that once I'm trading and I want to risk, let's say $10 on a trade, as soon as I set a stop loss and the trade goes against me, the system automatically closes the trade on my behalf. Why? I just issued a command of 10. So you need not to go more than what? 10. You understand? So that's the reason why sometimes stop loss is set. But it's good that you set stop loss in any way. Anytime I enter a trade, my first point I look at is my stop loss because, for instance, I trade most of the time in Forex, in the gold market. So we know how gold moves faster. or even during the US session, you know how there's more volatility in the market and the prices are moving, changing colors here and there. So stop loss is very much important. So the next one is what? Take profit. And then take profit is also a risk management tool that help you to accumulate what? Your profits. So that should the trade should reverse, it will not affect you, right? Okay, so we will talk about that one too quickly. So the next one we want to talk about is entry point, stop loss, and take profits, right? So these levels are these are key levels in trading. This is the whole thing, the whole basics about trading. The entry, stop loss, take profits, right? This is the best, the only three things you need in trading. So there are some rules that you have to know or say. Let's continue. So a price at which a specific order, buy or sell, it can be a buy order, it can be a sell order, right? It's placed on both, on its place. Okay, so on the figures below A and B, we see price level at what? Or the entry point at what? 0.9034 is the entry point, right? So we can equally see it here. This area is our entry. This area is our entry point or level. Understand? So stop loss, as discussed earlier, it helps the investors to risk a specific amount, right? So considering the figure, this is our stop loss. This our stop loss, and you can see that should this trade per calculation, of which we'll be doing more of it later, per calculation, should this one move higher? Should this one move higher, we are in gains, but should it come down, should this one we just place for 30 pips, right? And if you are using the mini lots, just as I said, 0.01, you should be getting only what? $3, right? Negative $3. But as you go higher, the higher the lot size, the higher your chance or your debts. Okay. So on the next one, you talk about take profits, and we say that this allows the investor to secure profits, right? So, and you see that should this trade go, this is our entry, and this is our take profits. So should this trade go in our favor upward, we gain what? 100 pips, which is with the minimum lot size is what? $10. All right, it's a very good money. Yes. So a quick one said that take profit level must always be placed at least 1:1.5 to reward ratio. So risk to reward ratio is very much important key in forex trading. Everything you do, you have to get the best out of it. So that one too, we will be talking about it in the next in our subsequent videos, all right, or webinar, right? So let's talk about something also here. So this is PIP, all right? PIP, 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 and profit loss, right? Profit or loss, all right? So PIP, we said that it stands for percentage in points, and it is the smallest price movement any exchange rate can make. The smallest. It measures the amount of what change in exchange rates for currency pairs in the forex market. A PIP is calculated from the fourth and final number after the decimal point, right? With the exception of the Japanese yen-based currency pairs, right? So any currency pair, with the exception of the Japanese yen-based currency pair, are calculated from the final and the fourth decimal place. We are talking about this one. is the fourth, right? So when you count after the points, so 1, 2, we have 1 here, 2 here, 3 here, this 4. So this is where we start counting. And that number, the fourth number, is the ones. The third one is the tens. The second one is hundreds. The first one is what, thousands. And the whole number, which is the main one, is what, tens of thousands. So you should remember about that. And in this case, we are looking at Euro USD. Euro USD. In this, our tuition, that's what we are looking at. So Euro USD, right? So we can see another number here, which is very small. It is called what? The units or pipette or the fractional. Okay. Fractional symbol means that's 1 of what? 10. 1 out of 10. So before actually a pip can happen, it means that the pipette or the units or the fractional have to move up to 10. When they get to 10, then this one moves once, either down or up. You understand? So it's really important. Some brokers will give you even up to these decimal places. So at the end of the day, you should know where it is started from so that you don't confuse yourself with some brokers. All right. So as mentioned earlier, all Japanese yen-based currencies are calculated and this displays to only what? 2 decimal points. Let's consider the example below for Euro JPY. The same concept, but just that this one is only 2 decimal places. And this one to have another number here. And sometimes other brokers will give you up to 4. But also, just as I said, you should know why it is so, right? So the second number is ones. The first one is tens, hundreds, tens, thousands, and then tens of thousands. So it's almost the same, just that it has a different calculation. Then we have something we call profit and loss. That's a proceed of all results, a proceed or results from all closed trade positions. Profit and loss calculations are based on the number of pips movements acquired within a specific period a trade position lasted, either in your favor or against your favor. All right, let's continue. So here end the end of the session, this introduction. So in the next moment, we are going to talk about currency pairs, okay? And we are going to dive deeper into currency pairs. So next time we meet, I think the date will be shared, and then we can all get the best out of it. This is just a 4 session, and then we have to complete. And at the end of the day, I'll share a simple strategy with you all, which you can use to trade as a beginner on your demo. Remember, I said on your demo account, not your real account. If you want to start a real account, please get ready to be on our course. All right, let's take you through. You need to get a mentor. Let somebody mentor you. All right. Let us be your mentor. Let us be somebody you will be accountable to. So that when you have somebody you account to each and every day, you do the things right. Right? Don't be in your corner and start borrowing money to trade. I bet you throw all the money into the gutter. Once again, this is Blue Rose FS Academy, and we are running this promo just for this month. We started on the 1st, and we got a very good number to start with in our next class starting in September. So please be part of the beginners, the mastery, advanced, and mentorship. And after 25th going, this price will start rising, especially this wonderful ones you see here. start going up to its original price, which is, it was here, and they will rise to its original, right? We have a very good number of students. They are doing well, and I recommend that you can. I know you can also be a very good student. Why not join us so that we all together we dive into the Forex market? See you the next time, and God willing, when we meet again, we will cheer up. I know we are going to meet on a higher table one day, but until then, before you leave, please just hit on the subscription button if you have not. So just subscribe, let's build a community, and then also like this video and share it to others, right? So that we can all enjoy the benefits of it. God bless you, and I'll see you the next time. Bye-bye. I love you all. Blue Whales, diving deeper, deeper, deeper into the markets.